Hello and welcome to Why Not Mint Money. This is Neil Borate from the Mint Money team. What was the top performing mutual fund of the year gone by of 2021? Chances are that you haven't even heard of the fund in question. It is Quant Small Cap Fund. And in fact, as many as 7 of the 14 schemes run by this fund house topped their respective categories in 2021. And if you think that's just a fluke, well, Quant Small Cap Fund, which gave a 93% return in 2021, gave an incredible 76% return in the previous year. Should we go further back? Well, the answer is no, and that's because of the history of Quant Mutual Fund. What was once Escorts Mutual Fund was bought out by Quant Capital in 2018, and therefore the earlier returns of this fund house are not particularly relevant. What is, however, relevant is just how this fund house, this small fund house, is doing it. And that is where the story gets interesting. Now, usually you can, figure out the broad strategy of a mutual fund by talking to the fund management, by looking at the principles that they say they follow, and by looking at the portfolio of the mutual fund schemes. In case of Quant Mutual Fund, a lot of that is just a mystery. The fund house says that it follows a VLRT framework, which is valuations, liquidity, risk, and timing. But that doesn't offer too many clues into how the funds are actually run. Experts say that they use a host of macroeconomic variables, which are input into their proprietary models. And those models, unfortunately, are not there for us to understand. Now, another way to understand where a mutual fund is generating its returns is to look at the portfolios. But here, Quant Mutual Fund's portfolios are rapidly churned. If you look at the portfolio in 1 month, it will be quite different from the portfolio in the next month, and so on. This change in portfolio is captured by a measure called turnover ratio. And this turnover ratio was an eye-popping 145% for Quant Small Cap Fund. In fact, for their top 3 funds, Quant Small Cap, Quant Tax Fund, and Quant Active Fund, if you go by AUM, the turnover ratio ranges from 145% to slightly over 250%. So, unfortunately, exactly how this fund house is doing it is something of a black box. However, one distributor that we spoke to said that for clients who want a high risk, high reward experience, who want something akin to a PMS, a portfolio management service, which is a high risk, high reward counterpart of a mutual fund, they can look potentially at some of these schemes. Another distributor pointed out that even though the size of the schemes has grown, if you note that at acquisition in 2018, the total AUM, the total size of the money managed by Quant Mutual Fund was 245 crores. That has now become almost 4,500 crores. Despite this enormous growth in size, their performance so far has indeed held up. So to summarize it, you can always adopt this famous line that is attributed to Deng Xiaoping, that it doesn't matter if the cat is black or white as long as it catches the mouse, and go with the performance of Quant Mutual Fund, which is indeed commendable. But keep in mind the risks involved, and keep in mind that this fund house follows a very different strategy to your conventional mutual fund, and it is not entirely clear just how they are delivering such high returns. Thank you.